Hey everyone, my name is James Bork. I am the co-founder and CEO of Intu, and I'm very excited today to have a conversation with Jason from Kagami and Jacob and Miro from Consola Finance. Hey guys, how you guys doing?
Well,
Thanks,
thanks.
James. Very
Lovely to
well.
be.
Fantastic. Jason, we've never actually met in person. We've got to fix that soon.
I know, crazy is
Um,
crazy.
So let's just go ahead and start off easy and maybe do a round of introductions, introduce who we are, what brought us here, and then we can get into some of the topics that we have. How about the Consola team? You guys kick it off.
Yeah, sure. Thanks, James. Very happy to be here. My name is Jacob, and I'm one of the co-founder of Consola Finance, handling the business side and holding the position of the CEO right now from Consola. Yeah, so what we're doing is, in a nutshell, we are a crypto finance and accounting platform. So we bring the data from centralized exchanges, from the blockchain directly into a crypto subledger. We do accounting calculations. So for instance, you can build your profit loss statement, you can build a trial balance and other different exports. And then we bring the data to your ERP, for instance, QuickBooks and Xero. I want to hand over to maybe Miro, our CTO, to do a short introduction.
Oh, thank you. So I'm Miro. I'm the co-founder and CTO of Consola Finance. And a little bit of my background story. I was working in different industries for over a decade now, mostly in data engineering, data science space. And then suddenly a couple of years ago, I fell in love in crypto. So I started my first company. I was like really a couple of years ago. And everything went well until we realized that there is also the accounting part of it. You need to file taxes. You need to do some annual reporting. And as many, we had the assumption that blockchain, it's in itself a bookkeeping journal, which is not necessarily the case, right? It's not really human readable. You can't really talk to accountants with the blockchain itself.
It's not a ledger. It's not a ledger, right?
Yeah, not
Distributed
really.
ledger
No.
technology.
Yeah, with Consola, it became really properly subledger. But yeah, so that was the pain point that I experienced on my on skin, so to say. And it was also the motivation to start Consola and make it easier for all the companies out there. Yeah, and that would be in a nutshell. Happy to discuss more. And it's really a pleasure to be here. Thank you very much.
So I'm James Bork. I am the co-founder and CEO of Intu. And Intu is a little bit different on this call. We are an infrastructure provider, not even a provider. We've built a protocol. And our main focus is to create and introduce accounts to Web3 that do the things that as human beings we expect accounts to be able to do. So now you can have a static public address, right? You can have your identity on chain, but you have the ability to reset your password. You have the ability to share ownership with other people in your organization. You have the ability to be a human being, right? And more closely mimic these kind of ownership structures and really like the human expectation part of it. It's just, again, been working in and out of Web3 for almost 5 years now. And every time we try to build a product, we came back and say, yeah, but we need this, right? We need secure connections. We need access management. It's not ready. It's not ready. So rather than just sit around and wait, Steven, my CTO, and I, we decided to start building on accounts and just start fixing those problems directly. It's been a wild ride. I am not a cryptographer, but now I can hang with the best of them. And I've learned a ton along this road. And we're very excited to be here and support projects like you guys. I think this is something that overall a lot of us can use. Jason, why don't you wrap it up?
Sure, thanks, James. My name's Jason. I'm co-founder of Kagami, which is a decentralized custody protocol. And my other co-founder is my sister. They say never work with family. So far, it's been going great. And she was the one who actually dragged me into crypto, dragged me into DeFi, and then got me deep in the weeds because I'm quite technical in terms of looking at infrastructure, and we love Intu and how we integrate with Intu. But essentially the problem I came in to solve was my sister's a derivatives trader and she was raising 50 million USDC for a liquid trading fund. And she's like, how do we custody this money? We want it insured and safe. We want to also be able to use it. And can you just go sort that out for me? And that was the problem I came in to solve. And I thought it'd be really quick. And after 2 or 3 months of digging, I just couldn't find a solution that actually appeased all the commodities traders on our team that really wanted to know key sovereignty, where their key was and how all that side of things worked. They didn't want anything centralized, and they wanted something super sophisticated to have all the risk limits they were used to from TradFi. And yeah, we just threw our hands in the air and went, this just doesn't exist. And that's where Kagami was born, and that's our mission, to try and solve that problem.
Appeasement. I like that. I don't use that word nearly enough. Appeasing sophisticated traders. That's fantastic. All right, guys. So just looking at the agenda, Jacob, you wanted to jump right in and talk about the bear market. So let's maybe start by setting some context, maybe painting the landscape a little bit. Where are we in crypto? Where are we in Web3? What are things looking like right now? What are your thoughts?
Yeah, so I proposed like the bear market as an example, but super good to jump in the topic. I think this is a topic that nobody of us can escape from on a daily basis. But overall, I would say, even though I always repeat myself if I talk about the bear market, but to me, Miro, it's a very good time to build. So all the noise around prices hitting new all-time highs, it's not here. So you really talk and work with the people who are dedicated to make this industry and the infrastructure better. On that side, I would say we see the positive things within difficult markets. But for sure, what we also experience is user growth, finding new customers. I can for sure imagine that it would be much faster if there's more attention on the topic, if there's like more attention by the masses looking at crypto and so on. But on the other side, just sharing an example, I come from a conference in Frankfurt the last couple of days, and I need to say what I experience right now is, even though crypto is not in the mass media right now as it was before 2021, the institutions who decided to go into crypto, they did not stop. So in this conference, I never saw so many people working full-time in crypto industry and wearing a suit. So this was a completely it's super cool
Oh
to see.
no.
I don't want to drop now all the names of the companies I talked to, but just to name some, there was like SAP. I had a longer meeting with. Not sure if I think it's public to share. They're building a wallet within their infrastructure. You meet a lot of custody provider, banks, institutions who start like actively working on offering crypto trading to their Web2 customer base. So I think overall there's a lot of attention on the institution side there, but without the big noise around. Yeah. On the other hand, for sure, we have issues like there is government regulation, unclear government regulation in the US. In EU is getting better with MiCA now, so some rules are coming. But some economic factors like high interest rates, inflation, is like always an issue which does not help to bring more customer activity to crypto. So now I talked already a lot.
No, it's all right. I feel like suits get a bad rap. I love a good suit. Right. I wish the suit could be cool again. I don't know. Just to build on that a little bit, Jacob, I've seen that, especially in the bear market, I've seen two types of projects really evolve. The first are the good ones, right? People that are building in the bear market with a long-term vision, right? They're not trying to just capture whatever the meme of the day is. But I'm still seeing a lot of like projects that are just, we're going to call it decentralized. We're going to say it's on Web3. But really 95% of our tech stack is AWS, right? It's still all Web 2 and it's very flimsy. Yes, I think the bear market's the best time to build. I think that's why we're here. If you can survive the bear, you can survive anything. But at the same time, I'm a little disappointed that I still see people compromising on things that we shouldn't be in Web 3. And they're flimsy, they're appropriate when you have 1,000 users. But I have concerns that when we hit the bull market and people start coming back to crypto, people start seeing Web 3 as not just this, crazy sandbox where people become millionaires and lose millions overnight, that they really see it as the future of the internet and the future of finance and the future of their digital lives. And a lot of them just aren't robust enough. I don't think they're going to stand the test of time. Definitely on both sides. Yeah, Jason, anything you'd like to add?
Yeah, I think that's a really good point, James. Certainly in the space that we play, which is institutional and custody, you see a lot of centralized solutions and a lot of solutions that just they don't really stack up when things like regulation come into play, and suddenly you have a situation where you're not sure if your digital assets can be frozen because you have government influence coming in on a centralized provider who may well have a lot of their tech in AWS. You're not getting that true benefit of decentralized, especially on the Ethereum blockchain, which we're big fans of, because like James says, it's a lot of smoke and mirrors, and the back end of a lot of these infrastructure projects are very centralized. We get people a lot more educated about where their data and assets are really sitting, and so that they know they're in a really decentralized censorship environment.
I can only add to that. Yeah, I'm also now really big fan of marketing a solution as a fully decentralized, which has been really centralized. But at the same time, what I like to see is that not every solution or not every good use case has to be decentralized. So this is what also Jacob mentioned. I like that the current situation or current market opens more for a search for use cases rather than, as you also mentioned, following the memes and so on. This is something I like to see. Despite not necessarily everything being decentralized, also there is a lot of nice use cases for centralized. It might eventually grow into decentralized. It's not necessarily anything that negative.
No, I think it's a perfect segue. I was going to try and frame most of this conversation with the concept of expectations, right? If we're talking about the evolution of Web3 and we're talking about bringing more people into it, everyone keeps talking about the next billion. I don't think that Web3 is ready for the next billion, despite what all the big guys are saying. And I think a big part of that is because we don't meet expectations for the mainstream. And I think to your point, Miro, a lot of that comes down to things being appropriate. Does this need to be decentralized? Does it not? Should sovereignty be a core part of this? Should it not? How much convenience is good? How much security is too much? I think that as a community, we need to be a little bit more flexible, and we need to be able to support builders in matching that level of appropriateness. So obviously that's very easy to say as like an infrastructure guy, but you guys that are actually building for end users, I'd love to maybe explore a bit what you think is appropriate as an expectation for your end users. What do you think people should expect more from? What are the things that we shouldn't be expecting at all?
Yeah, very good question. Maybe I can take that. On the one hand, we are exposed to the end user, but overall, we as a company also focus on B2B. So we provide accounting solution to customers who have the end users. So we're still exposed to it. But overall, what we see somehow is that for sure, the expectations from the last bull market, they've mainly driven on price expectations also. But with the customers we work with right now, that's not the case. So we have not, I think, one use case or one kind of expectation from our user set because it's diverse. But what we overall see is that companies build a community. So we have some of our customers working with hundreds of thousands of users, building blockchain games, exposing them to NFT drops. But what we see somehow, it's expected that the finance and accounting side, it's like easy to manage because we live in a world of data and also is data. And somehow it is expected that everything what's happening on the blockchain is also like comparable to bank transactions, so human readable. But what we just see is there's a lot of focus in building a very innovative product, but not really taking care or understanding what kind of implementation it has on the finance and accounting side. That's for us for sure one of the most interesting topics because it's our business model. But I see that the expectations are somehow coming from Web2 world, having same expectations in the Web3 world, but there's big difference here. One example, for instance, is if we talk to smaller startups in the Web3 space and often discuss also our price point. And we have, I would say, like a very fair pricing. But if you compare our solutions then also with a QuickBooks and a Xero from the Web2 world, it's a completely different product because what it takes on the Web3 side to make crypto transaction human readable, to bring it in a format that a finance person can work with. These are two completely different worlds. I think there the expert in how you manage crypto as a finance person, as a finance manager in the CFO department. I think here the expectations are somehow not right and a lot of expectation is being done. And therefore not when I go into promoting now Consola too much. We were building really not a crypto company, but a data company. So it's a data first company.
Sure.
Accounting is a data problem. This is what keeps us also like alive. On the one hand, the expectation towards what Consola is providing as a service, but overall what the future of the companies mean.
So is there too much of a gap right now between the expectations of someone's financial literacy alongside their crypto literacy, right? That Is that kind of the root of this problem, that you have two very sophisticated groups of bodies of work that you have to be familiar with, and they don't talk to each other, right? Is that part of it?
For sure. I think as a successful manager in the CFO space in a crypto company, you need to have for sure education and knowledge about the finance side. You can bring that in from your previous job in a Web2 finance department, but that's only half of the rent. So you also need to have an understanding of what are the key differences in like crypto data versus Web2 financial data. So I think to really be an effective manager here and to be successful, you need to have both. And I think it's a marriage. So if you have a age-long career behind you in a finance sector in Web2, it still means you need to pick up the new key aspects of the technology and constantly learn. So I think, there is a expectation gap for sure.
Okay, so you're driving for happily ever after. I like it.
Also for me,
Jason, what about you guys? Jason, I think you guys have more exposure to a lot of the TradFi stuff too. I'd love to hear what you think your guys are expecting and why you guys are building for that.
There's a lot of people out there who understand the benefits in TradFi of blockchain. It's just too much of a hassle at the moment. It's too difficult. And I just want to get on there, and we're in a multi-chain environment now. There's lots of L1s, there's lots of L2s. Traders just follow the liquidity and where the deals are. And at the moment, it's difficult. You've got private keys to manage. You've got multiple keys, multiple different wallets on different chains. You've got centralization issues in terms of if you go with the custody provider, where are my keys? How do I ramp on? How do I ramp off effectively? There's a lot of moving parts to chase what might be a slightly higher return. And now that we're in a bear market, it's probably a low return. So now the interest has really fallen off because there's just not the high returns that there were. But that'll change, and I can talk more to that. But what people are expecting is something akin to their existing trading platforms where, they can jump on there and you don't need multiple different wallets. All the different systems talk to each other and everything's just really seamless and easy to use. And that's probably a long way in the future until we match exactly what's seen in TradFi. But we don't have to get there perfectly, because blockchain has some really compelling advantages that TradFi will never have. Instant settlement, you can be anonymous. There's just a whole bunch of advantages. So all we need to do is get it to a tipping point, as long as the user experience is good enough, and the floodgates will open, and there's no going back. There will just be so billions and trillions of dollars coming on chain.
I think we're all definitely working on it. If you had to say in one sentence, getting into the evolution of Web3 and where I think collectively all of us are pushing towards, what is the tipping point? Obviously, it's going to be a bunch of things coming together at the same time, but the priority, if you think there's one thing that we need.
One thing that we need? Good question. I think we probably need a better human Web2-like experience in Web3, where there's not this big jump and barrier to getting into Web3.
Jacob, Miro, did you guys get that? Or
no, I think that was the connection of Jason. James, maybe we can give the question back to you. What would you see as the tipping point?
What's the tipping point?
Until Jason is back.
I think Jason was approaching this, and I think we've been flirting with it for a bit. I think with the bull market in the past 2 years, there's been so much hype, there's been so much positivity, but also an eagerness to just capture the moment. A lot of projects they've abandoned the why of Web3. Jason was talking about instant settlement and sovereignty and anonymous trading and stuff like that. Like, those are core tenets of what this should be. And I feel like, especially in the last cycle, we stopped caring. It was just like, oh, it doesn't matter. We're just going to host these JPEGs on Amazon and then put a NFT that links to it, and then we're going to call it decentralized, and that's it. Right, NFTs is probably a horrible example for this, but I think that as a community, we need to really get back to what makes Web3 better than Web2. And it just seems like recently everything that we're doing is trying to imitate things that we already have. And unless we embrace both, unless we innovate enough that the imitation is actually better than where we started, I don't think we're going to get to that tipping point. I think we really need to keep pushing, and almost, maybe pushing is the wrong word, almost go back to the basics and emphasize the importance of, just for one, leveraging on-chain data. Like, we don't have people owning our data. We're not sharing it publicly. Everyone has access to it. We're not using that super effectively. right? Leveraging the fact that we have invented programmable internet money. I don't understand why Web3 companies are throwing out SaaS models. Like one of the fundamental principles of Web3 is that you can't be turned off, right? You can't have someone come in and freeze your assets. And yet we are, for whatever reason, okay with charging a subscription, which means that if I stop paying you on a monthly basis, you lose access. You lose your data, you lose your assets, you lose whatever. We're in this weird transition phase where we're so keen on recreating the experiences that people have that we've abandoned why we started this in the first place. And so just getting back to that, at least for me, that'll be the tipping point when we remember. I think that, especially us on this call, I think we've kept that in mind, right? This is something new. This is an opportunity that the technology itself has provided. How can we leverage this in order to create a more compelling experience for the mainstream, for normal users? I don't think the average American really understands their bank statement, but I know for a fact that they definitely don't understand what their crypto trading is, right? We need to, you guys are leveraging that and helping bridge that gap. That's why we're here. But just so many projects that get so much attention are just leaving that in the dust. Oh, single sign-on with Google, with Apple. You've just given identity back to the centralized providers that we were trying to leave behind. What are you doing? Yes, convenience is great, but we can do better. And I think that's what we're all about. We're providing the infrastructure so that people can do that. It didn't exist before. Yep. So there's my tipping point. Miro, do you have a tipping point?
Yeah, this might be a little bit off topic, but
let's go. I love off topic.
I'm a huge fan of esports, and I think the tipping point will be whenever gaming will hit, or crypto will hit, or decentralization will hit gaming, because in this way you can really target a lot of people with a proper use case, with whole the marketplace and everything that it's already out there for all the gamers, but still not tokenized yet. So I think whenever this happen, either proper Web3 gaming platforms or the marketplaces, that will attract a lot of people, and this is a little bit of new level of gaming or new level of interaction. I think that's, in my eyes, in my opinion, the tipping point that I'm desperately waiting for.
I don't know if I actually want to admit this. As someone who has lost more hours to things like World of Warcraft, I wish that those hours could be translated into something of value beyond just the enjoyment. And so I completely agree. And I think esports, it's fascinating. I met a friend in Paris who used to be a professional gamer. They have an esports team here in France. I had no idea how much of a business it was. I had no idea how popular it was. I had no idea how many people actually sit down around a TV and stream these things. I thought it was niche, and it's not the case at all. And so I think either professionally or just casual amateur, there's really an opportunity there to convert those hours into something of value.
That's for sure one of the
very cool.
fastest growing industries globally, so the global gaming industry. And I fully agree with Miro here. The question is, how do we build here also the connection between Web3 and gaming? Because for years you're reading it, starting from in-game purchases enabled by the blockchain. Now I think there's a lot of discussions going on about GTA 6 now experimenting with it, but also the mass adoption did not happen. So I think the big question is also, how can we contribute that this can be the case? I'm for sure not the gaming expert. We work together with gaming companies. Yeah. And we're just fascinated by the idea of having smart contracts generating the revenues, having that all on the blockchain, fully transparent. For sure, you need a good accounting solution to account for that. And seeing in-app transaction between users with enabled by blockchain, but included in the game. I think it's fascinating, and I would like to build something also this myself. But big question is also, how do we get mass adoption in gaming enabled by blockchain?
Yeah, green fields of opportunity. If you've ever been to a gaming conference, it just feels very like the steps that they're making for innovation are just, they're tiny. They're like, we're going to help you get 0.5% more users or 0.5% more in revenue. It's time to grow. Cool. Do we feel like we've covered the evolution of Web3? Do we want to talk about custody a little bit?
Yeah, in terms of the evolution of custody is just going to have to be as simple as a bank account. People are going to need social recovery options. There's just no way that a seed phrase is going to be acceptable to billions of people to learn and remember this seed phrase and try and look after it. And then people are going to want to talk fully cross-chain. I can send money from my bank account to someone on the other side of the world in any currency I want. And it's slow and whatever, but it's simple, right? I can do that in crypto. It's instant, but it's difficult. And people just want a seamless experience in custody, and that's what we've got to get to.
Yeah, we assume a lot of prior knowledge when we start approaching a cross-chain kind of environment, which is crazy, right? You need to wrap this so you can use it for gas on the target network, and then you need to wrap the actual asset, and then you need to hope that it bridges safely, and you don't know what the infrastructure of that bridge looks like. And there's always like a 20-minute pause in between where you're like, is it good? Did I do it?
100%. And I've had times where I've had to estimate the gas that I'm going to spend transaction, and I'm like, I don't know what that estimation is. Then I get a little bit of gas left over because I couldn't spend it all.
Yeah.
That's got to change.
Yeah. No, I've got remainders on more chains than I'd like to admit. And I don't know, maybe I'll need it, maybe I don't. I'll probably forget about it at some point. Jacob, Miro, what do you guys think about custody? What is the appropriate level of custody, in your guys' opinion, for the mainstream folks? Maybe not mainstream, but for the folks that we're trying to attract, right? Because I think, Jason, in your case in particular, we're assuming a certain level of sophistication. Jacob, you guys are B2B focused, so you're also assuming a certain level of sophistication. In terms of custody, what have you guys seen that people want or people think it should work this way?
Yeah, I think we have seen on the spectrum from managing millions on a MetaMask wallet to a full custody setup consisting of cold wallets, warm wallet, and hot wallet environment with automated treasury rules of reconciliation and movement between those wallets. We have seen a lot, and overall, I think custody, like the right custody setup, must be done from very beginning if you want to operate in the crypto space as a company. For the retail users, it's for sure a different story. Also, a lot of offerings there. But as a company, I think it's very important from very beginning to, first of all, to have a proper company formation also. So to register a company that suits your company goals. But then also from very beginning to make an active decision on where I want to hold my crypto assets. Also, what should be my split fiat versus crypto? How much do I want to be exposed to non-stable coins, and then also who's my partner for the right custody setup. I think that's for sure also a question of cost. Yeah, the larger players are very expensive, but does not always mean that they're better. I think they're good solutions also for a fair price, but I think it really depends on my risk and convenience level. We as a company, we chose a setup of, for sure, we're holding some tokens on MetaMask, but this is a very small amount only. And then we are relying on multi-signature wallets. Overall, because we're still a rather small company with crypto exposure that can be managed, I think, with a multi-sig wallet. But if we would go on a larger scale, for sure, we also would rely on proper service providers, and also more than happy to learn more from Jason if your solution maybe would be something good that we can leverage in the future.
Yeah, awesome. I see that there's two ways that custody goes. You go fully decentralized at the moment with a Gnosis safe, but you give up a lot of your sophistication with that. Yes, you get the multi-sig. You don't get really sophisticated whitelists and transaction limits and a spend limit where Jacob can spend a certain amount per day, but James can spend double that. And Miro pay out the whole account or whatever policy you want. So right. A lot of that's been given up, and it's gone to the centralized providers to offer that. And essentially what that means is that projects have compromised their key sovereignty, their ability to really own and control their own key. What they've had to do is compromise that and give up some or all of that key material. I could spend 4 hours talking about all the different custody solutions. And the simple fact of the matter is you're giving up some or all of your key material to a third party, and you have no control over where that key material is. You have no control over who they show that key material to. And of course, if they own some of your key material, they can lock and freeze your assets whenever they want, or if they're told by a government it's time to freeze these guys' assets, we're running some AML checks on them. If you're a trading fund and your assets get frozen for a month or two while the AML checks are done, it's very problematic. You get a lot of the sophistication that you want, but you get it and you take on all the risks of centralization. And if you go decentralized, also the solutions aren't cross-chain. They can be great for Ethereum, but then you have to manage the same risk policies on Polygon, and you've got to manage them on all different EVM chains. Centralization solved a lot of people's custody problems, but they've given up a fundamental tenet of wiring crypto in the first place to do that. And that's what Kagami is looking to solve, and that's what Intu's looking to help us with. There's great opportunity in that space for sure.
Jason, can I shamelessly ask how Intu has helped you solve some of those problems? Kagami's leveraging Intu?
Yeah, definitely. We're leveraging Intu for, you call them DEOAs, we call them organizational wallets, but it's the ability to create an organizational wallet that's done through decentralized key generation. There is no seed phrase for that wallet, and you can then reconfigure the underlying participants of the wallet. And as a project, you can control like who gets your key shares. You can add people on, you can drop people off, you can change the underlying signing scheme of that organizational wallet, and it's totally cross EVM chain out the box. And like to us, that technology is just revolutionary. It's doing that in the way that Intu does it. So we're not running 2 or 3 AWS servers hoping they don't get hacked and hoping they don't get DDoSed. Intu goes through Ethereum smart contracts to communicate with clients. It just solves a lot of the problems that centralized providers have at the moment.
Thank you, Jason. Appreciate that. Obviously, we love that you guys are building on us, and I've been excited at having shared this journey with you guys. Consola, when you guys are ready and you're creating accounts for your end users, you give us a call.
Absolutely.
Fantastic. Any last thoughts, any last words we'd like to share with whoever might end up watching this, or a little soundbite for the promos?
For sure. To end the call, I always offer all the listeners to schedule a call with us, and we're happy to provide a demo of our solution, how we can partner up. And yeah, so just contact us via Jacob at Consola.finance. It'd be cool to do this. Yeah.
Fantastic. We'll make sure to include all the contact information in wherever this is posted, YouTube, etc. Jason, last thoughts?
Yeah, I'll just jump in and say, definitely have a think about your key material. Like, where is it? Is it in a hot wallet that's exposed to the internet? Is it sitting on a ledger that's nice and secure, but then you can't share it around with people? Just have a really good think about how you're managing your keys, because that is the whole core tenet of blockchain, and you get that real control over your own assets, your own wealth. Yeah, definitely come have a chat with us, come have a chat with Intu if you've got questions about how all that works. There's a lot of people, I think, who just jump into this space, don't think twice about it, and then they lose their digital assets or they worry about losing it. And it's not a worry that you should have.
It needs to be a Web3 of second chances, right? It's a shame that we're not there yet, because we all make mistakes. Thanks for listening, everyone. Intu.xyz, we are launching our V1 the next couple of weeks. We've finally finished audits. I can proudly say that everything is green and safe and ready to go. So if you're creating accounts for your end users and any of the things that Jason said resonated with you, please come talk to us. We are tooling for builders. We are ready for you now. Come on in. The water is warm. Miro, a quick goodbye.
I'll just repeat, if you want to have a demo or showcase of Consola Finance, Jacob at Consola Finance. But also, we have some white papers and thoughts about data or blockchain auditability, or how to build blockchain applications with big data. So if you just want to have a chat or anything, always happy to be here and discuss.
Thank you so much, guys. This has been fun.